Hello everyone, it's Davide here and welcome back to Learning Finance. In today's video guys, I'm going to talk about Alibaba stock. So Alibaba Group, ticker symbol BABA. Some people refer to Alibaba as the Chinese Amazon. The stock as of now has been going down a lot, as we are going to see, not because of the business, but because of the Chinese government. Okay, so is it a buy today? What is the fair price of it? We are going to do a fundamental analysis about it, and we are going to see what's the fair price of the stock and how far the stock can go. Between the many investors in Alibaba, we have Ray Dalio, which, as you know, is the owner of the biggest hedge fund in the world, and he bought a lot of Alibaba stock. As we can see from here, Ray Dalio bought around 1.3 million shares and around 4.72% of the total portfolio. So in this analysis, we will understand if today is a buy for us as well or not. The only thing I ask you guys is to leave me a like. It's very important, an early like just now. It doesn't cost you anything and you're gonna help me a lot with the channel to reach more people. And subscribe to the channel so you don't miss any new updates. Let's begin. Alright guys, so first of all, let's start with the business of Alibaba to understand its business. And here we have the revenue by segment. So Alibaba is mainly based on 4 segments. 86% of their revenues it comes from the core commerce, which is basically Alibaba.com, AliExpress, everything related with the online market, shopping and things like that. Mainly in China, but they have also international stuff like AliExpress. Then we have the orange here, which 8% is the cloud business. So the cloud business of Alibaba is growing and growing. Right now is the 3rd in the world. Then we have the 5%, which is digital media and entertainment over there. And the 1%, the little yellow slice over there, innovation. So they also invest in new startups and things like that. As it is possible to see from here, we have the 4 main businesses. Now, this is Chinese money, okay? But what's important to it is to understand the path and not the money. The money we are going to see later on. We can see how the core commerce is growing at a very fast pace, as well as the cloud computing, which is going parabolic as of now. And then we have innovation, which is growing as well, and the digital media, which is flattening a little bit. Okay, anyway, the biggest and most important parts of the business are those 2, so which are growing exponentially. So that's very positive. This is Alibaba revenue from 2010. As we can see from here, this graph is incredible. They went from a very small amount of money, below $1 billion in revenue. They went parabolic. As of now, the expectations for 2021 and 2022. Now here I have to point one thing. The Alibaba fiscal year is different from the US companies. Okay, so that's why here we have 2021 and not 2020. 2020 for Alibaba has already happened because their fiscal years goes from the 1st of April to the 21st of March. Okay, so this March we had their 2020 fiscal year. And now they are already ideally in the 2021 fiscal year. So this is why it's shifted, but it's the same. So the expectation for the next year are 103.99 billions in revenue. And then for 2022, 138.8 billions in revenue. As we can see here, the first 2 quarters has already happened. And we had 21.7 billion in Q1, 22.8 in Q2 in revenues. So the Q3 is expected to be 32.6. So here is very huge expectation because of all the festivities and Christmas and stuff, Chinese festivities. And then Q4 26.78, which altogether will bring to a total revenue of as we saw before, 103.9. When we take a look at the balance sheet, so this is the last balance sheet of the last fiscal year just ended in March, and we had a revenue of 71.98 billion, and here is very important to see that the net margins is very near to 30%, so a very efficient business, especially if you compare it with Amazon, which is around 5% here. Okay, so hugely impressive the efficiency of Alibaba. And when we see the balance sheet, we realize that we had total current assets 65.3 billion, current liabilities 34.15, gives a current ratio of 1.9, which is very great for a big company like that. Absolutely no risks of financial distress and stuff. Very great, very solid business. Even more solid when we look at the total assets and total liabilities, as the ratio is almost 3. So very, very great. This is a wonderful balance sheet for a big business like Alibaba. There is nothing to worry about. The debt to equity ratio, 14.6%. However, when we deduct cash and cash equivalents and cash on hand, which is more than $55 billion, we have a 0% as a debt ratio. So once again, this is absolutely incredible in terms of financials. Book to value of just 5.8. Amazon is more than 18. Okay, so just even because of that, we understand that Alibaba probably is still very cheap considering its potential. Now, to understand the valuation, I have done 2 types of valuation. So the first one, free cash flows to equity, so discounted free cash flows. As always, we take the previous, in this case, 6 years, and we try to estimate the next 5 years. Here we have the historical free cash flows to equity. Here we have the future revenues, so expectations, and we can see that the first 2 are the one I've already showed you. And then from 2023 to 2025, I have considered 4 different scenarios. 16% growth, then 20%, then 25%, and 27% growth rate. We can see that the net margins, I took 28%, and the average is 34.67 in the previous 6 years. Okay, so I have been conservative. And let's see what we get. This is the first one, the 16% scenario. The requirements, I took 11% as a rate of return for the equity of Alibaba. The perpetual growth, 3.50. And we get today's company valuation of $766 billion divided by the total amount of shares outstanding. That's the fair price today, 283. With the 16% scenario, which in my opinion is very conservative for Alibaba. Then we have the 20% scenario, same requirements. It gives us today a company valuation of 836.3 billion and a fair price of 309.09. Then we have 25% scenario, fair price today 344.03, and then the 27% scenario, which gives us a today's company valuation of $970.8 billion and a fair price of 358.7. So as we can see from this valuation, the company looks very undervalued. We are going to see now a valuation with a PE ratio. So here we have, I just took the 20% scenario, so the revenues of the 20% scenario in 2025, guys. So here is 2025. And we have 239.8 billion in revenue. As a net margin, I have been very conservative. Here, I just took 25%. And then the net income, you just take the 25% of the total revenues and you have $59.97 billion, okay, in net income. Then we have the PE ratio. Now, when we take a look at the historical Alibaba PE ratio, we realize that the average is around 31. To be conservative, I took 29. You just take the net income, you multiply it by 29, and you get the market cap in 2025, which is 1 trillion.7. You divide that by the total amount of shares outstanding in 2025, which I took into account dilution. So instead of 2.7 billion, I say 2.8 billions. And you have a share price in 2025 of $621.16 per share. We discount this back today at an 11% rate, and we have that the fair price today with the PE valuation is $395.20 per share. So once again, it looks very, very undervalued. When we take an average of these prices, so 5 prices, we get that the average fair price today is $338 per share. Today's share price is 260. That would mean a discount as of today of minus 23%. So 23% discount Alibaba today with this valuation, which in my opinion is very conservative. So in terms of business, Alibaba is probably one of the best business out there, which is still hugely undervalued in my opinion. As we can see from here, the stock could at least more than double in the next 4 to 5 years. So that's a very, very great investment in terms of the business itself. However, what is the problem? What is the risk? And this risk is very common when you invest in China. To understand what is the risk of this Alibaba itself, but also all the businesses in China, is that when we look at China as an investment, we don't have to look at the Chinese environment with a US or European mentality, okay? Because in the US, companies, they can grow how much they want, and it's always very appreciated, okay, most of the times, as well as in Europe. We have this more capitalistic mentality in terms of stock market, stock prices, and the relationship with investors. However, how in China, we don't have to forget that we have a communist dictatorship, okay? Basically, Xi Jinping is not the most capitalistic man in the world. And the Chinese government is very, very, very strong. It's stronger than any business. The Chinese government, if they want, they can destroy a business without any problems at all. Okay, so why Alibaba is today so undervalued? Because investors, they realize the Alibaba business is brilliant, one of the most efficient out there, with an opportunity of growth which is huge, considering that China will become inevitably the first economy in the world. That's very, very incredible. However, these things can happen. So, the Ant Group IPO, all of that story, why? Why the biggest IPO in the history has been stopped? That could have happened only in China, because as I just told you, it's not a capitalistic world. And if you go down, this is from Market Insider, Business Insider, is a very interesting article. We realize that this is what can happen in China. Basically, Xi Jinping has displayed a low tolerance for big private businesses that accumulate wealth and power as they threaten his authority, okay? So the government in China has to be more powerful than all the business out there. And personalities like Jack Ma, which are basically more like the US mentality, okay? So to grow a business and become huge like Jeff Bezos and stuff, these kind of personalities are not well accepted by the Chinese government, because their businesses, they can become so big, so powerful to actually threaten the authority of the leader. So This is the main problem with all the Chinese company out there. China is not like United States. When you invest in a company, you just worry about the future growth of the business. When we invest in China, we have also to keep in mind that the government is very powerful, and the relationship between the government and the sentiment of the government toward a personality like Jack Ma, for example, is very important, because it doesn't matter whether the business is actually awesome, as we saw like that, but it doesn't matter. It can be the best business in the world, but if the government doesn't like you, they can stop you, they can destroy you if they want. So that's the main risk with Alibaba. It's a business which, in terms of business itself, it's wonderful. It's very difficult to find something that powerful in terms of growth out there as big companies, okay? However, this is the risk. This is the risk, and it cannot be avoided. So we have to keep that in mind, and this is why the stock has dropped. Basically, not because of Alibaba itself, but because of the government, because of the Chinese government. So we have to keep that in mind. As of now, the stock is way undervalued because investors, they fear these kind of things with the government. Now, in terms of business, is Alibaba today a buy? Well, yes. I bought the stock around 265. I wrote that comment on YouTube. I don't know if you saw it. It was basically in real time, just after I bought the stock. In terms of business, yes, it is a buy. You saw the numbers, but what I cannot tell you, because I am not an expert of this and I have absolutely no idea, is how this relationship with the government, how these issues that Jack Ma is having with the government will eventually result. Okay, we don't know that, and the market doesn't know that as well. This is, look, once again, the stock today is going down again, and this doesn't make absolutely sense in terms of business. It's just because it is China, and that's it. That's the main risk, guys. Sadly, I cannot tell you, well, don't worry, it will be sorted out, we'll end up in a good position with Xi Jinping, because I have absolutely no idea. In terms of business, is probably one of the best stocks to buy right now, but you have to keep in mind that, and I have absolutely no idea how and if this will end up in a good way. So that's the main risk, guys. Probably, I don't know, Ray Dalio thinks that this situation will end up good. That's why he bought the stock. He's continuing to buy Alibaba. I have a position as well. I don't know. This could end up, as an example, if things go well, could end up as the same as happened with Facebook and Cambridge Analytica. Okay, so a huge problem momentarily, and then the stock, boom, continued to go up. But it's China, so the real risk is that if they want, they can also split Alibaba. That's just an example, okay? So that's the risk, guys, and that's the video. So I hope you find this video interesting. Just leave me a like and write me down below a comment. Tell me, do you think that this situation will eventually be resolved in an optimal way for Alibaba or not? So I hope you find this video interesting. Subscribe to the channel, and as always, guys, have a wonderful day.